Stephanie. We are finally live, and good morning to all who are joining us on Facebook and on social media. Thank you for joining us on our various platforms. We are live. Thank you for joining us with our radio audience. And today, as I said, we'll be going through a bit of a milder version of this as we're getting ready for the MPC announcement tomorrow. Tomorrow is the big MPC announcement where the central bank gives us the central bank gives us the announcement of where they're going to put rates to, and also most importantly for tomorrow, where do they see things like inflation, where do they see things like the exchange rate, where do they see things like economic growth, what is the outlook that the central bank is giving us. That's very important data, especially for everybody who is an investor trying to figure out where to put money. That is why MPC Day Today is extremely important for all of us who are looking for where to actually plonk our funds and how we should look at our investment targets and goals. Remember, that's very important data also because it tells you what's a good bond to invest in, what's a good rate of return, what is the inflationary environment going to be like for a lot of your investments going ahead. So please pay attention to tomorrow's preview and also the analysis, the post MPR analysis going forward. Now, we'd like to open up today with our touch on some data today. So let's open up with our market roundup. And today, Stephanie, we did see yesterday that the Kwacha did close at about 19.2709, up 0.83% yesterday, and down 0.45% on the week, but still up 6.49% on the year. Yesterday, we had a huge jump in the stock exchange yesterday, thanks to Airtel, and we will give a bit of an announcement. We'll give a bit of data on Airtel itself. But it jumped up yesterday by 25%, pushing the index up 2.14% to a new all-time high of 8,552, closing 16.55% on the year. That's a big jump on the index there for all you people who are on the stock exchange. Remember that there are only 8 stocks in our country that push the index up very easily, because there are about 8 companies, in fact now 10 companies, sorry, I forgot to mention, that have a valuation above 1 billion kwacha. And it's those companies that have a valuation of above 1 billion kwacha that when they tend to move, they push the value of it up. But anyway, we are seeing a few more companies probably potentially joining the billion kwacha mark. My prediction is probably somewhere in the next year or two, we will probably find about 12 companies now with a billion kwacha valuation or more. In other words, the market capitalization valuation of that. The exchange is up 16.5%. Now, going into the rest of the currency markets, we did see that the rand yesterday closed about 1.0103, down 0.19% yesterday because of a weaker rand data. We did see that the rand is down 5.41% on the year to date and up 2.27% on the month. We are seeing that currently we're trading just a bit, in terms of dollars, we're trading just a bit towards the all-time highs of 21.423, the 52-week highs, let me say. But when it comes to the rand, we're trading well below. We're trading right in the middle of the 52-week highs and the 52-week lows. So the rand is kind of trading somewhere in the middle, while the dollar is leaning towards the higher portion. It's leaning towards where it was in terms of its all-time highs. In terms of bonds, we're still up about 16% year to date, and in dollars, we're just up above 10% year to date in terms of bond traders in dollars, with interest rates still about 24.52. So that's where we are sitting in terms of bonds. Now, in terms of the commodities market, we did see that copper dropped down again yesterday to 8,291. Based on expectations that Chinese data would be moderate. And I think that's where the concerns are still coming, that we're still experiencing moderated global growth. And that is leading to a lot of economic slowdown. That's leading to a lot of global economic slowdown. And therefore, we're seeing that copper prices and copper demand is not as strong as we hoped and not as strong as we would expect. And I think that's where the struggle is coming from. And that's going to have a problem, by the way, Stephanie, in terms of tax revenue for the government and also inflows of So I don't know if you can see, and also inflows of dollars. Remember that one of our biggest zones of dollar inflows comes from the mining sector. So when you start to see lower copper prices, expect slower inflows of dollars from the mining sector, because one, you can expect that the taxes on copper will probably be slower, and also it disincentivizes mines to bring in more sales. It disincentivizes mines to make more, to sell more copper when they see lower prices. These mines are trying to hold back to wait for a time when prices of copper are higher. It's something everyone does in the world. Everyone says these greedy, evil minds, how can they do that? The reality is everybody does this. Whether you're a tomato trader, whether you're an onion trader, whether you're a maize trader, I've actually seen it in the vegetable and crop industry a lot, where people wait for opportune times to get the best price for their crop. So one of the reasons we're seeing weaker trade in terms of the dollar, we're probably seeing a weaker position continuously, is because our mining sector is not able to bring in as much dollars coming in, and the rest of our export sector is still in a very weak position. We'll be waiting for export data coming down at the end of the month. Coming down towards the end of the month, to see that Zambia is still in an export recession. That's a very sad and painful thing that we're facing right now. Other news that we also did see in terms of the commodity markets, remember there are two main commodities that affect us. One is copper, which affects the strength of our currency. And two is oil, which also affects the strength of our currency negatively. We did see oil come down yesterday on news that potentially China is going to experience even more slowdowns in their economy. We did see also that gold was down 0.2% in dollars. I remember, for those of you who want to save in gold, gold is an alternative that you use as a disaster hedge. You also hedge your portfolios using a bit of gold as well in the event you get a broad market downturn. And it's not something you keep all your money in, but you use it as a broad market portfolio hedge. Yesterday, due to the strengthening of the kwacha, we did see Bitcoin and kwacha up 1.14%, with Ethereum up 1.1% and gold up 0.6%, mainly due to the strength of that. And if we look at our year-to-date reads, we're still seeing that the lead for the year still comes from cryptocurrency. Bitcoin is up 89.8% on the year. Ethereum up 64.5% on the year. But remember, these are highly volatile assets. Gold up 13.3%, dollars up 6.5%, bonds up 16.4%. And the stock market is now leading assets 16.6% up year to date, with the stock market up 5.1% quarter to date, while the stock market is up 5.5% quarter to date and up 20% where it was in terms of the year. So now, in terms of also other readings that we saw yesterday, we have seen that inflation data from Germany came in softer, is continuing to be disinflationary. Indian inflation data, what we call wholesale inflation data, is also in the negative. Manufacturing prices from India are also in the negative. Remember, India is the third biggest import source that Zambia has. So that's why we have to track inflation of produce coming out of India. And also consumer inflation expectations in America are coming down from 3.8 to 3.5%, with interest rates in America also still trading high. 3-month and 6-month interest rates at 5.3 and 5.29%. So we're still seeing elevated interest rates. We're also seeing that Japanese GDP yesterday, and that was a key data, seeing Japanese growth data and Chinese growth data. Japanese growth data gives us a look at how the electronics sector is. Japanese GDP growth data came in stronger than expected, 6% GDP growth in Japan year on year for quarter two, and quarter on quarter GDP came in stronger as well. So stronger than expected Japanese GDP growth does give us some signals that there are some recovering points of the global economy, with also GDP year on year of quarter two also up 3.4%, and also external demand from Japan up 1.8%, but private consumer demand up 0.5%. In other words, it's really export. It's export products that are really driving Japan back into the fold. Capital expenditure in Japan was 0% growth. It did not grow quarter on quarter. So we are seeing a stagnation there. It's really export growth. The weaker yen is actually helping Japan on the global economy. Now, if you take a look at China on the other side, next door neighbor, the flip side of that switch, what we're seeing is that China's fixed asset growth, in other words, physical buildings, all those things, grew by 3.4%, instead of 3.8% from the previous month. That shows that we're still in a slowdown in physical capital. Industrial production in China grew by 3.7% versus the 4.4% of last month, also showing a slowdown in industrial production, affecting the price of copper, We're also seeing retail sales in China down 2.5%, expecting the size of the growth of the Chinese internal market. So it's down from 3.1% to 2.5%, while Chinese unemployment rose from 5.2% to 5.3%. Remember, China is having a huge youth unemployment problem, where youth unemployment is actually currently 20% in China, when it used to be less than 10%. So these are dangerous signs that we're seeing the slowdown of China, but some optimistic signs that we're seeing the pickup of Japan. So what are we seeing across the board? Signs of mixed reads on growth. Industrial growth from Japan looking a bit strong but weak from China. With inflation still coming down and interest rates still elevated, we are still in a hostile investment environment all the way through, Stephanie. We are in a hostile investment environment. That is a warning to everybody. So we are still not out of the woods, though I think the heat has stopped rising. And that's our news. That's our rundown of our market data and analysis. So very quickly, Stephanie, as we get into today's data, today is what we call the deep dives. There are a few news stories that stood out to me before we get into our topic of discussion. And today's topic of discussion is about sentimental assets. It is about sentimental assets, putting value to things in a sentimental fashion, and how that is toxic to your wealth building. Yes, people, it's toxic. So the first piece of news yesterday is Airtel shares jumped yesterday to the highest level they've ever been in 15 years. Airtel shares yesterday jumped by 25% to 37.5. This is the highest we've ever seen Airtel shares since August 2008. I'm so used to saying 20 something, but 2008. That is the longest that we've seen Airtel shares jumping this high, up 25%. So at the close of business yesterday, Airtel Networks was closed at a 15-year high of 37.5 kwacha. Shares are up 117% year to date. There has been an 85% rally in the shares over the last 3 months, due to a quarter one interim dividend of 1 kwacha 98, which was due to be paid at the end of July. So there's a few fund managers and investment managers now who have been paid hefty dividends, who are now reinvesting in the stock and buying up the shares, and therefore that drives up the price. So one of the things you should always remember is that stocks that signal dividends and that give out dividends often drive growth. Now, the company now has a valuation of 3.9 billion kwacha, which has made it overtake.
Okay, so I think Munyumba seems to be having some issue with network on the other side. But just to make mention that at some point we will be opening up the phone lines, and the number to call is 077 It's called Behind the Market, and today being the second day of the week, obviously you can also get to comment in the comment section, as well as give us your comments on 077 290. So far, what are your thoughts on what we definitely do have? We do have Nyumba who will be joining us on the other side pretty much soon. But obviously, just to get started, obviously, with what we expect in the day, he definitely is sharing with us some of the stories that happened, obviously, in the week. So some of the stories that definitely do help in terms of business. Remember, it's behind the market. We get to compare what's happening, obviously, on local grounds, as well as in terms of international grounds, and how we can get to improve. We always do talk about the mindset shift, and of course, you have to make sure that even as you listen to this particular program, that your mind is actually shifted. You're gonna think business, and obviously, you still do need to continue, obviously, to stream online. Have you shared this video? You also have to make sure that on the other side, you have shared your video, as well as told your friends to tell the friends that we definitely are live on Money FM behind the markets. And of course, we are yet obviously to see some of the rates in terms of what's driving the inflation rate, as well as the month will definitely be coming to the end. But just before then, obviously, you do know that to comment, you can call 077 1616 290. That, of course, is 077 Pretty much be looking at Munyumba as he gets to come back on this particular show. Now, of course, we dive in deep. Obviously, having been the second day of the week. So we want to actually get deeper into the stories and how we get to align them all together just like that. You call in the number 077 1616 290, and of course we definitely will be getting to talk just like that. Pretty much be checking if we've got some bills to pay on the other side, and if not, we still will be bouncing back. As I must say, pretty much I have lost Muyumba on the other side. If you're watching us on our Facebook platform, it's Money FM Zambia 93.7, and even then pretty much soon be getting to a lookout for any comment that we do have. I might be just asking admin if we do have any text on the Facebook platform, as we could actually get to see the pop-up if we do have anybody sending us text messages. On the other side, we do have a set of text messages, obviously, and this one is coming from Anthony. So Anthony says, good morning, enjoying the show. Also, let me get to do my shout out, obviously, to Mr. Joseph, who's always looking forward to having me and Munyumba on the other side. So we do have Munyumba, and we're back with the stories.
The irony, Stephanie, of reporting on Airtel as a stock to only have the network cut. What an interesting conversation. What an interesting situation. And I will not say which network I'm using, but I'm sure we can guess. So let's take a look also at, that's the reality. So let's take a look also at as I was saying, the Airtel stock, just as a recap, closed yesterday 117% up year to date, up yesterday 25%. There's been an 85% rally. So in other words, the price of the value of Airtel shares have been up 85% over the last 3 months after the announcement of an interim first quarter dividend of 1.98%, which surprised all investors and therefore has pushed more investment in the value of the company. The company now has a valuation of 3.9 billion kwacha, overtaking Zambia Breweries to become the fifth largest stock on the market. So remember, the four above it are CEC, which has a valuation of over 8 billion kwacha, ZCCM still above 6 billion kwacha, ZCCM still above 6 billion kwacha, while we've got also Zambia Sugar, which is above 5, and Zanaco, which is above 4, and therefore now fifth comes Airtel, and sixth is Zambia Breweries. Those are your billion kwacha stocks. Now, there are a few more after that, which follow that in terms of Chilanga Cement, which is also a stock with above a 2 billion kwacha valuation. Zafiko also has a billion kwacha valuation. And also Puma Energy also joined the billion kwacha club. It was one of the newest entrants of the billion kwacha club. But these are your top. It's now one of the top 5 of the billion kwacha club. Now, currently, the stock has a price to earnings ratio of 4.23%. That is just simply the price of the share divided by the earnings of the company. In other words, earnings per share. So when you divide the profits divided by how many shares they are, and why that price to earnings ratio is important, because it tells us whether a share is overpriced or not. Currently, we use a median price to earnings ratio of about 7 to 1. So in other words, the price of the share should be 7 times the earnings of that company. In other words, the value of the company should be about 7 times how much it makes in profit. Currently, Airtel is only about 4.23 times, meaning it has room to grow potentially. Does that mean it automatically will grow? No. It just means that on a fundamental level, the stock is trading at an underpriced level, but on a book-to-price ratio or a price-to-book ratio, it is fair priced. So in other words, there is upside, there's fundamental upside of this. Now, the recovery of the company is based on the cost rationalization they've been going through, and also the fact that the industry has been growing as well. Remember, the industry is said to be one of the key drivers of economic growth. We have seen that profit margins of the company have risen again. Operational profits of the company have risen from 27.5% back to 40.3% as of 2022. And simultaneously, we've seen net profit margins of the company, which dropped to negative 13.1, come back up to 20.7%. So the profitability of the company, plus the growth of the company, plus the growth of the industry, plus the payment of a dividend, are all compounding together to give the strength of the share. And now remember that there are still risks out there in the actual fundamentals of the stock itself. So remember that investing in stocks is risky. Sit down with a broker, sit down with an advisor. It's not a gamble, people. Investing is a long-term activity where you take positions in stocks for a long period of time. You do not look to get rich next week, and there are no promises of returns. Okay, but it is one of the most historically effective methods of investing your money, especially faster than inflation, because companies are one of the best things to actually circumvent inflation according to data. Now, other news that we did see yesterday, Stephanie, was US hedge funds are dumping shares in Chinese companies as of Q2. So hedge funds slashed its position. The hedge fund slashed their positions in Alibaba by roughly about 90%, according to Q2 filings. Changes in positioning come as China abandoned its COVID-19 controls in late 2022, hopes that economic growth would surge, but the outlook quickly darkened as the data showed an uneven recovery. The US and China geopolitical tension has also raised concerns. We also see that the Biden administration has also prohibited companies in technology investments, which is also making them worry about making investments in some of these Chinese companies. So hedge funds from the US are now very wary about making investments in China. Oil dips yesterday on worries of China. On China worries ahead of US retail sales data and Fed minutes. In China, economic data for July trailed expectations, and it was among the worst readings. Plus, we've also just gone through Chinese retail data, Chinese industrial data, and all that is showing that oil is currently reading quite poorly. So that's something that should be dangerous. That's something that's showing that oil is slipping a bit. But remember, oil prices are really high. Also taking a knock due to Chinese data is copper. Copper has come in weak due to weak Chinese industrial data. As we saw, Chinese industrial growth is slowing down. Chinese fixed asset development is coming down. So copper is useful in Chinese industrial activity. So as a result, we are seeing weak Chinese growth. And that is it's actually weighing on total Chinese growth, and that has actually been the effect of the market. Now, finally, Stephanie, before we get into our topic of discussion for today, one of the main things I wanted to share on as well is also the global inflation read. Yesterday we did manage to collect our data on the global inflation index. And that handsome fella standing over there is going to take you through it. This is the July global inflation read. We did see that global deflation has slowed down on a year-on-year basis, but has picked up on a month-on-month basis. Global food prices have exited global food prices have exited deflation and gone up by 1.3% as of July 2023, led by oils. In other words, cooking oil prices are up. As of the month, they're up 12.1%. So that should be of worry to us. Remember that Zambia imports 2/3 of its cooking oil. So if cooking oil prices are up internationally, you best believe that we're going to be importing more expensive cooking oil coming soon. So watch out for the food basket and how that's going to affect it in the next couple of months. 5.3% also increase in the price of fertilizer also means that our imports of fertilizer, remember, we're not free of importing fertilizer yet. That's going to be a problem for us. Non-industrials have actually been led by the fact that energy prices are up 5.9%. My expectation now, with cooking oil prices up, fertilizer prices up, and energy prices up, these are all the weak spots of Zambia inflation. And to me, this is an inflation risk that's going to reflect in higher food inflation and higher transport inflation. And those are the two strongest inflation points of Zambia. So I think we do need to be careful about what that means for us as an economy. Now, going forward, in terms of how does it look across the spectrum? As you can see, oils, in other words, cooking oils, are up 12.2% from down 2.4% in the previous month. Fertilizer up 5.3% from down 9.3%. So it's actually reversing some of the price losses there. Timber prices up 1.7%. That's good news for Zafeco shareholders who are looking for Zafeco as a company. And if we're looking at timber exports, cotton is up 0.9%. 0.8%. That might affect textile imports, but everything else is still deflationary at the moment in dollars, and that's actually decent news for us. Now, on the other side of it, in terms of year-on-year inflation, the only thing that's gone up, that's still up on the year-on-year, is sugar, and that's also something that's interesting. On the previous months, sugar prices have actually come down for the first time in a while. If you look at sugar there, it's down 3.9, 3.2, 3.9%. So we're seeing a downward trend in sugar prices. That's not good for companies like Zambia Sugar and their export business going forward. Now, if you look at the month-on-month inflation data from the different indices, as you can see, we're led by energy inflation, which is up 5.9%. That'll actually affect transportation and energy costs. We're up. The World Bank General Commodity Index is up 4%, mainly led by energy inflation. Food inflation is up 1.3%, the FIR index, while agriculture inflation is up 0.6%, metals inflation only up 0.4%. That's bad news for the kwacha. When we've got stronger prices of energy and weaker prices of metals, that is weakness coming into our currency going forward. Simultaneously, we have seen that metals inflation, in fact, year on year, is the only thing that's up 1.4%, while we're seeing agriculture inflation in terms of year-on-year inflation up 5.5%. Energy inflation is still down 41.3% off those highs of the Russian-Ukraine war, and therefore that's what's keeping the World Bank Commodities Index low, while the food price index is still in the negative. And that is the roundup of our market reads and our market data. Hopefully, I will have our dear Stephanie back very time soon. Now, we will be having our topic of discussion. And the question I'm going to throw out to as many of us today for our topic of discussion is, do you value when you look at your wealth, are things that have sentimental value, in other words, things that are not easily tradable, okay? Do you have a lot of your wealth in things of sentimental value, or do you have a lot of your wealth in things that are marketable and tradable and cash flow generating? So in other words, do you have most of your wealth in sentimental value, or do you have most of your wealth in financial value? Okay, that is a question I want to throw out to as many of you as possible. As I said, I will, when my co-host returns, I will pose that question to her. But do remember, you can call us on Money FM, and you can also text us in the comments section. You can also text us. Also, put your comments in the comment section to ask the question: do you keep most of your wealth in sentimental value, or do you keep most of your wealth in financial value? Now, I'm going to explain the difference. And this is a cautionary tale I say to a lot of people. Be careful of keeping the majority of your wealth in sentimental value. In fact, I actually say avoid what I call the sentimental balance sheet. Okay? And that simply means where most of your wealth is in things you find valuable, but the market has not placed a credible value on it. Okay, so one of the biggest flaws I've generally witnessed when it comes to people is that a lot of them have a huge prevalence of assets that are kept in sentimental value. Okay, so things that they find sentimental value. In fact, Stephanie, when I say sentimental assets, what does that mean to you?
Sentimental assets.
Yeah.
I'm gonna give it a shot.
Go for it.
Probably something that you hold too much emotion to.
Exactly.
Yeah.
Keep going.
Okay.
Keep going.
I was doubting myself.
Keep going.
Yeah, something that you probably hold so much value, attach emotion to, probably could be a sentimental asset. Maybe your the phone that you love so much. Maybe your house. I don't know.
Exactly. And you know, and you place the right word there. So I've written the question here: do you keep most of your wealth in sentimental value or financial value? Okay, so check that in the comment section to everybody. Please feel free to text us and also feel free to call us up on that question. And Stephanie, that is the correct definition
Put
that
up
we
the
have
number
there.
on the screen. It's 077 1616290. 077 Do you keep most of your wealth? The question
Sorry, I'll
again,
put it back out.
do you keep most of your worth in sentimental value or in financial value? Wow. And my question for me, Munyumba, is why keep it in financial value though? Money
Well,
depreciates.
because
That's an asset as well. Money finishes as
exactly.
well, but even assets depreciate. So yeah, why keep it in financial?
It's what people say about about love. When it's cold, when you're hungry, can love feed you? No, it won't.
It
Sure,
won't.
love can encourage a person
Unfortunately.
to go and earn money, but money feeds you, not love, my friend. That's why
Yeah.
people don't leave each other for a lack of love. They leave each other for a lack of food. That's the reality.
Mm.
And one of the reasons is that a lot of people keep a lot of their so-called wealth. If you're to go through people's balance sheet, you find a lot of things that they find valuable. So I'm going to veer off of finance for a second, Stephanie, and just drift into. And I gave this example to a group of people yesterday. And forgive people, it happens. But these are two examples I'll give you that should help. There's a video a friend of mine shared with me of this lady who was complaining about struggling in dating. She was like, I'm struggling. I'm educated. I'm accomplished. I've done so much in work, yet no. And she's ranting about this. She's like ranting. And the lady sitting next to her says, it's good and all that you've done all of that, but that's not what men value. She said, look, men don't, it's like men are not, that's not their key driver. Sure, we value some education, but let's just be honest, people. Once a person passes a diploma, that's about it. There's not much of a difference. And I'm not saying that there's not much of a difference in the value of the education. I'm saying in terms of the value to the person, in terms of dating value. Okay. So what she was trying to tell her was be careful of valuing yourself on things you value when you're trying to get other people to value, because we have a tendency to want people to value us on the things we value. Okay? Because what she was saying is those are the things you value in a man, that's not the things men value in you. So that's one example. Second example I've seen, Stephanie, and I've seen this one is of people who've come out of college and have said, I studied for 4 years at university, I studied all this time, I've been a good student, and I'm still not getting paid well. That's not what the workplace values. Did you study the actual things that will get you paid? Do you have the skills that the workplace value? The problem is you want people to value the things you value and not the things the market dictates it values. And that's when we start to drift into the world of sentiment. We see this, by the way, in the event of car owners, landowners, homeowners. Now, I'm not saying you should not own these things, but the problem is somebody will say, no, my car is worth this much. To you, it's worth that much, not to the
It
people who want to buy
depreciates.
it.
Yeah.
No, but even the things you value about your car is often tied, Stephanie, to the memories you've had with your car, okay? Or the things you went through to get your car. There's a lot of emotional and memory value attached to it. That's not the emotion and memory value another person is going to have with your car. That's the problem. Even when it comes to pieces of land, a lot of people will heap their balance sheet in pieces of land that do not generate cash. Okay, this is where dangers come. They pile a lot of money into these things. They have no cash flow future in them. And yes, people say, no, we must own that. But what you're owning unproductive land. The purpose of assets is so that they can generate money to take care of you, so that you don't have to physically go somewhere to go and work for that money. The assets alleviate you from these things so that they can free you. That's the purpose of financial freedom. So you can't have a bunch of sentimental assets. And the reason I call even land sometimes sentimental assets is because people put money in and they start saying, no, my next door neighbor got 1 million kwacha on his house, on his land. Even me, I'm going, no, you're not. Because the two pieces of land are not the same. Okay? They're not the same. They've got a person will value it according to what they need it for. It depends on what the person is buying it for. It depends on so many factors. Yes, there is some sentiment factors that come into financial assets. Here's why I'm saying the majority of your wealth, Stephanie, when you sit down and do a net worth exercise where you put down all your assets and all your liabilities and value your financial situation, ask yourself, how much of these assets are market valued? Okay, third party consistently market valued. Shares on the Lusaka Securities Exchange are valued by the market. Bonds are valued by the market and valued by an objective calculation. A rental income, a rental property is valued by the cash flow it generates. In other words, the rent that you receive. It must be valued by something outside of your heart. That is when you have financial wealth. Financial wealth is easily liquidatable and therefore it can be converted to cash or it generates cash. But there must be a cash component to the valuation of this asset. You cannot value things. Your Benz is not the same value as your friend's Benz. I'm sorry to say it to people. I don't care how many memories you've had with it. I don't care how it makes you feel. Do not keep the majority of your wealth in things that you feel strongly about. Keep the majority of your wealth in things that are valued by the amount of cash they can generate and the amount and how much they can be sold for, verified by a third party market that consistently values these things. Okay. That is how you get out of what we call the sentimental balance sheet trap. Whether it's paintings, whether it's clothes, whatever it is, don't invest in things based on your emotional attachments to them. Invest in things based on a market and a cash flow. And ultimately, Stephanie, cash flow. Cash flow is what values an asset. The value of a cow, Stephanie, is how much milk it can produce or how much meat we can chow from it. But really, it's how much milk it can produce. That is the value of an asset. So ask yourself, is this asset producing milk to feed me? If I was starving, is this thing going to put food in my mouth, put electricity in my house, pay my taxes? Is it going to do that? Or am I just going to look at it and say, the good old days, I love having it? Those emotions, you'll starve with those things. So that is one of the things you have to. And the reason we do it, Stephanie, and I'll close off here, is because, as I said, we do it in dating. We make people value things we value when we don't ask ourselves, what even guys, what do women value in men, so that you can become that? What do men value in women, so that you can work on those things? I'm not saying change yourself totally. I'm saying those are the things you have to exemplify. What does my employer value in an employee? Not just going to your employer and say, I want more money because I'm alive, breathing, things are expensive, I have children. Is that what your employer values? Inflation. Is that what your employer values? Your employer values how much money and effort you can put into the work and how much of an asset you are to their cause. If you're not an asset to their cause, what is your salary negotiation based on? And that's what I mean by sentimental valuations. You must avoid these things. They're dangerous all the way through. And I'll leave it there.
Yeah. I think they're very much dangerous in that you might end up buying something that's not really as valuable as you think it is. And when the time comes and you actually have an emergency, you get to find out just how much it wasn't that worth it. So honestly, do think about it.
Thank you very much. And I'll leave that there. Stephanie, it's bye for now.
It's bye, Munyumba, on the other side. Until tomorrow again. And to those that are listening, join us again tomorrow. And from me and Munyumba, it's bye.